Okay, good morning, everyone. My apologies for the slight delay. You're all most welcome to today's episode of the Market Snapshot. My name is Norbert Kiza, and today I'm going to be preparing us for what we can expect this afternoon with the NFP report for March. So this afternoon, we shall be expecting our NFP to be released. And of course, the data is going to be released at about 3:30 p.m. And I want us to start by just looking at the DXY and, of course, seeing how it has been trending and how it could potentially perform at the release of today's NFP. So looking at the data that we have, the March NFP jobs data is expected to show an increase, a decrease from 275K to 212K. And of course, now what we are waiting to see is what the actual is going to be. Now, I know most of you have also been following what's been happening with Jerome Powell. Jerome Powell has been fairly dovish, and of course, with what he mentioned recently, the market seems to have, uh, referenced what he got and perceived it in a sense that we are not going to see risk on assets such as gold and the indices reacting that much to a potential cutback of any rate cut talk. So even if they say that they're not going to cut rates, I think the market has sort of distanced itself away from what's happening. Now, looking at the DXY and how it performed this week, the DXY has been in a steady uptrend from around March. And if you look at what's been happening, even with the risk on assets, we are seeing that some of them have actually had very sharp declines. Yesterday, I'm sure most of you must have seen what happened with US indices because they had a very sharp sell. Now, looking at the DXY being in a steady uptrend, and of course, seeing that its December lows have failed to break, we tried breaking to these areas here. That was around the 8th of March, but instead we saw the DXY actually moving higher. Now, looking at the current data, I'm expecting that the DXY is most likely going to see a move to the upside on a potential number anywhere above 275K. So if we get numbers such as maybe 300K, if we get possibly 400K, it's going to spell a very bullish DXY. And of course, that will allow it really to respond to a potential sell even on the other assets such as GPPUSD, and of course, things such as gold and all these other commodities. Now, speaking about gold, I just want to mention that we've been seeing that there has actually been a lot of talk about, I saw a comment made by Blinken, who is the U.S. Secretary of State. He indicated that um, the Ukraine is going to join NATO very, very soon. And essentially, what this means is that we are going to potentially see some increase on the safe havens, and we also might potentially see gold likely buying, even with a likely weak report from NFP. So this is my fib box, and looking at my fib box right now, I've essentially marked that peak for DXY. These are peaks from Feb. And of course, we're also looking at the bottom that we had in March. Now, I'm thinking DXY today, if we get a NFP report anywhere between 300 to 400K, I'm expecting us to see a very sharp move on a DXY, potentially taking out this level here. So at the moment on DXY, it almost looks like there is some kind of double top. And this double top seems like it's going to break anytime from now. And we should see it steadily moving higher. Now, in the event that we get a report today that is going to see, uh, the jobs that are anywhere between maybe 75K or uh, downwards of 150K. Uh, this is highly unlikely. Meanwhile, I don't expect us to see bullish DXY, but of course, this is what we can expect. So in this case, then of course, DXY is going to be fairly bearish. And if we fail to take out, of course, that peak for DXY, then it's unlikely that we are going to see we're likely going to see a potential bearish DXY, and of course, even likely then, likely weakness for things like GBP USD and of course Euro USD. Now, having said that, let's quickly just potentially see what we have on the calendar. Now, if you go on the calendar, the main event, of course, for today is the NFP report, which of course is going to be released around 3:30. Now, the other thing that is going to be focused for the market is going to be the wages. Remember that the Federal Reserve had indicated with their recent comments that if we see any resurgence on wages, then it could spell higher inflation. And of course, that would mean that we will likely see a cutback in that rate cut talk by the Federal Reserve. Now, the other thing that is going to be our focus is going to be the non-farm payrolls, rather the private non-farm payrolls. So the private non-farm payrolls, as you can see here, they are indicating a potential decline. So if we see these numbers coming in higher, I'm thinking that we are going to potentially see a very, very strong DXY, like I've indicated to you, and we might see it potentially moving up to where it was on the 2nd of April. So crossing over to the comments from the Fed speakers, this is currently what we have. We've been having a number of Fed speakers this week, and a lot of them have alluded to the likelihood of us seeing at least one rate cut. Now, what I've been observing with the market and what I've been observing with this information is that if you go retrospective and see how the market has been reacting from December, we've been noticing that in December, when we got data, we saw that actually, the Federal Reserve, of course, when they met in December, they indicated that they're going to start cutting rates. So when we had the next meeting in January, they came in and they said that they might consider not cutting rates too soon as they wait for inflation to get to their 2% target. Now, here we are in a situation where we had PPI data coming out higher, we had CPI data showing signs of resurgence, and then we have Powell indicating and keeping that red cut narrative, showing to us that there's a likelihood that they're not going to really mind even when inflation resurges. Now, we also know that one of the things that the Federal Reserve has been one of the things that has really been on their discussion has been the job growth in the US. The job growth has been indicating signs of very, very sharp resurgence, which of course is likely that it could also spell signs of wage growth inflation that may now likely also stop them from getting to their 2% target. So, seeing that in Jerome Powell's recent conference, he did not at Stanford University, he did not mention anything about hot jobs or anything like that. And I think that even if we get a hot jobs report today, yes, we will likely see a sharp move for the DXY, but we may also see that risk-on assets may have a hard time uh, going under intense selling. Okay, so keep that in mind, guys. It's just something that I need to mention. So at the bottom here, it's saying US employment gains are likely to continue in March, while wage growth has moderated. Payrolls are expected to increase by at least 200K for the fourth consecutive month. Average hourly earnings are expected to rise 4.1% from the same month last year, marking the smallest increase since mid-2021. Now, what that means is that we are likely, of course, to see a potential move higher for the jobs data. We should see a number anywhere above 200K. And if that number comes in, then we'll likely expect to see a very sharp move higher for the DXY. Awesome. So it's time now for the charts, guys. Let's cross over to the charts and see what you can expect over there. Okay. If you have any questions, guys, feel free to send in your questions. I'll be happy to answer them as we go along. We are going to be starting with US 30, and then we shall continue to other things. So yesterday, US 30 had a very sharp sell. And of course, that sharp sell for the US 30 did not come as a big, should not have come as a big surprise, simply because we had a very nice rising wedge that appeared around here, okay? And that rising wedge, of course, opened up the DXY, rather opened up, I'm used to the DXY, opened up US 30 to very sharp selling, okay? So the rising wedge appeared on the H1, showing signs of bearishness, okay? And even now, we should see likely weakness for that for Dow Jones. If we get a strong report, a relatively strong report, then we should see a bit of recovery here that can potentially take us a little higher, possibly towards this level, and then we can potentially see it selling from there to the downside, okay? Now, previous NFP reports have also seen very, very strong selling, rather very strong buying for the indices. So I do not think that's going to change. We will initially get a sell that may happen, and then after the sell, we will then see selling that will take us all the way down here. Now, looking at NASDAQ, NASDAQ is also seated in a key support area here from 20th of March. And I'm thinking we just have to wait and see how it performs around these areas here. Should we see a sharp move, rather a big report today from NFP, then NASDAQ is going to undergo very strong selling that could potentially take it all the way back to where it was. That was before we had before we had, if you guys recall, when we had the FOMC was on the 20th of March. So we shall be going back to those lows, okay? But even then, this one is looking relatively bearish, and we have to wait and see how the markets move there. Now, looking at Euro USD, let's look at Euro USD. We're going to look at Euro USD on the H1 time frame, and then we shall cross over to look at it on the H4 time frame. So Euro USD right now is had a W pattern. This W pattern formed on the 1st of April. I think you can see it right here. I drew it there for you. And at the moment, it's looking like it is steadily rising. However, we were unable to break this level slightly below the 38.2% fib level. And at the moment, it's actually in a bit of a selling trend. And I'm expecting that this selling momentum is going to continue today if we see a strong report. If we see a strong report from the NFP today, Euro USD is going to undergo very strong selling and could potentially sell it back towards this area here. We are in a descending channel, and this descending channel began around the time we had. It began just, I think, just a moment. Yeah, so this is the descending channel we are in for Euro USD. And I suspect that this descending channel is going to continue. So we should see Euro USD selling and getting back into that downtrend, possibly on the back of a strong NFP number. Anywhere above 300K, anywhere above 300K, anywhere around 400K is going to sell the Euro USD very sharply, and it's possibly going to continue in that downtrend. Now, if I add my fib level here, okay, they actually have my fib level there. So on Monday, this is where we were. We were right here on Monday, and we bought all the way to this level here on a bit of a choppy trade. And I'm thinking right now we are going to see some selling for Euro USD on the back of a strong NFP report that can take it all the way down here. Now, if the NFP report we get is fairly weak, or if we get a report that is below 200K, then we are going to see some choppiness for Euro USD. and possibly it will range within this area here until it recovers, and we shall see it buying all the way there. Okay, so if we get a report of above 300k, we are going to see selling on Euro USD. A report below 200k, we are going to see buying on Euro USD. Now, if you go on the H4 time frame, this is what it looks like on the H4 time frame. We are in a descending channel very clearly, as you can see, right from this level here. And I'm expecting that at least we have to get below 50% of this Fibonacci retracement. So today, if you're selling Euro USD, you might want to have your take profit around this 50% fib level, because this is going to be a key area for it to test its support. If we see it breaking below here, then I'm thinking we're going to see intense selling, and we are going to come back to Monday lows, which are below 1.08. But for now, the downtrend is still very active. We are now below, we are now down by about 53 pips from that peak of Monday. Okay, now I know most of you are waiting for gold. I'm going to get to gold soon. I'm going to be getting to gold very soon, guys. Now, GBP/USD is right now in some kind of a descending wedge. However, this descending wedge is showing signs of weakness. I don't expect us to see a move higher on this descending wedge. However, if we happen to get an NFP number below 200K, then I'm expecting that we're going to see GBP/USD rallying quite hard, and it's going to move all the way back to where it was sometime yesterday. But if we see a weak jobs report today, then it is going to sell GBP/USD back to that golden ratio level, somewhere around uh, 1.25959. And if we test and bounce off that level and fail to hold support there, we are going to go all the way back to where we were on the 2nd of April. That would intensify very strong selling for GBP/USD. And since Euro USD and GBP/USD, their respective central banks have indicated that they are looking into cutting rates soon, that will open up the doors for intense selling. Keep in mind that we have seen already that we are trading close to the 50% fib level, which is somewhere around 1.26125. So if we fail to hold resistance there, then GBP/USD is going to sell all the way down there. That is on the back of a rise of a strong NFP report. If the NFP report comes in below 200K, like I've mentioned, guys, then I expect us to move all the way back here, and we should see intense buying for this particular pair. Now, let's look at gold. Gold has created a double top on the H1 time frame and also on the H4 time frame. Okay, gold has created a double top. Now, I've drawn my thoughts there on gold. A double top pattern is a very, very reliable sign of a temporary pause in bullish momentum. We also seem to be seeing signs where gold seems to have priced in every single potential escalation of geopolitical tensions. We have also not seen a resurgence in the tensions that we are seeing with Israel and Hamas. So, since we have a double top that has been created around 2,304, we saw gold buying all the way this week. It created a top around here, okay? And it also created another top around here. And gold is now in a very, very nice descending channel. It has already broken below our previous fib that we talked about on Wednesday. Remember, on Wednesday, I indicated to you that gold might potentially retest that 61.8% fib level. So it did, and it held support around 2,267. That is somewhere around the 50% fib level, and it bought off that level quite nicely. But it found a very, very sharp hurdle around 2,300. I'm sure you guys are aware about that. 2,300, gold failed to take out that level. It tried it again yesterday night, And yesterday night, it peaked at 2,304. It still failed to take out that level. And the key resistance for gold and where your stop loss level should be in the situation that gold buys today is somewhere around 2,304. However, there are signs of weakness in gold's upside momentum since it failed to take out that level yesterday. And this is in spite of the fact that we saw some escalations on the back of Iran warning of an attack on Israel anytime soon. I think they said within the next 48 hours, something like that. So, despite those tensions, we are still seeing that gold is having a hard time with buying all the way here. So, in the case of a strong NFP report, if we happen to get an NFP report where we see gold potentially, if we see a number of reports of 300K and above, we should see gold trending uh, towards that 50% fib level of 2267. Okay, those are just my thoughts. So that's what I'm thinking for the case of a strong NFP report. However, if we get a report that is fairly weak, then we should potentially see gold trading towards we should see it retesting. Gold will retest the double top area around 2,303 and move higher. Okay, so that's what I'm thinking in the case of a bearish or a report that is bearish for gold. So I hope you guys can see that. I hope my letters are clear. I can just try and make them a little bigger. Okay, so those are my thoughts for gold. Okay, those are my thoughts for gold and what I'm expecting to happen for gold on the case of if we see any of these happening. Okay, so if you guys notice, I'm not being overzealous with gold's potential downside momentum, but if we see those kinds of reports, then it's likely that gold at least could even take out this 50% fib level and then head to where it was on Monday, that was around 2,300 and 2,231. Okay, so that's very, very possible. If it fails to hold support at that 50% retracement, then we are going to be moving all the way down here. Okay, now looking at it in terms of the pip movement, we see a move of about wow, that's incredible. I don't think gold can do this, guys. No, 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 this would be crazy. This would be crazy because we are talking about 760 pips from the peak that we had yesterday. That might not suffice. I don't think. Of course, in the light of the tensions we are having with Israel and Hamas, and of course, you're throwing in the US and what it's been saying about Ukraine joining NATO. I don't think we can see a 700 pip move on gold. This would be extremely unrealistic, guys. I don't know what you guys think. You guys think that's possible? Do you think we can easily get a move of about 700 pips on gold? I don't think so. I don't think so because I mean here you have a situation where you have you're in a situation where you have geopolitical tensions, active ones. I'm talking about active geopolitical tensions. Yes, disaster is out of the way, but the geopolitical tensions are active. So I don't think gold can really sell all the way there. The most we can get on a strong jobs report is possibly taking out that 50% fib level and then holding support around here. That's 2,246. That would give us a move from current levels where gold is at. If you are to sell, then you'd be looking at about a move of about 450 pips. I think that's possible for gold. Yeah. So Uh, I know most of you guys are trading gold, so maybe that's how you can approach it today. Keep your stop loss at 2,300. Sell it from current levels, and of course, that's in the case of a bearish report. Bullish report, you should be testing, having your stop loss at this previous support that we held. That's around the 50% fib level. If we break below it, then we are possibly moving higher. So, guys, that's it from me. If you have any questions, now may be the time to answer the questions. If you have any questions, guys, kindly send through your questions. Yeah, it's impossible. It's impossible. Yeah, it's impossible. And of course, really for me, it's okay. For me, it's not really from whether it's impossible or not. It's from the fact that we still have active geopolitical tensions, right? These guys have not all of a sudden decided to make peace. You get it? They are active geopolitical tensions. So which means it's still prone to those upsides move from demand coming in from it being a safe haven asset, right? Yeah. So for me, that's really the approach. Yeah, Malombe, you're saying last week you talked about think on gold today will experience a drop. Definitely, if we see that jobs that are coming out 300K and above, then gold is definitely going to have a retracement. Okay, yeah, yeah, definitely going to have a retracement. Of course, I would say if we are to talk about it in terms of possibilities, I think anywhere, I would say anywhere, even 250K or 300K could also still give it a potential move higher. Last week you talked about crypto trading on your platform, but the spread on Solana is like 1,920. What's the point? Confirm. Um, Let me check how big Solana's spread is. Just give me a moment. What account are you using? Guys, if you're going to trade crypto, make sure you're using what is it? A premium account, okay? Oh yeah, it's actually quite high. It's actually quite high. It's actually quite high. But what I was advising with trading crypto is what I know is that especially if you're opening up a 0.01 lot size trade, you just need about I think 0.2, about 20 cents margin to open up a trade. So yes, the spread is big, but that does not mean that you can fail to make money. Okay, as long as your stop loss and your take profits are fairly decent, and as long as you have enough margin to keep your trades open, then I don't think the spread should be a problem, right? Yeah, and I don't think you're going to get any better elsewhere because crypto generally the spreads are within such ranges. Yeah. So, any other question? I was trying to look for US bank forecasts for NFP, but I seem not to have gotten any, guys. My apologies for that. It would have been really good for us to see what the US banks are forecasting for NFP for today. But we don't have those forecasts. So I think soon as I get them, maybe I'll be sharing them. But for now, I don't think they're there. Moses, you're saying which currency pair would be the most preferred to trade today? I think for me today, the best currency pair I'd focus on might be Euro USD, without a doubt, because Euro USD, in the likelihood of a weak jobs report, we are potentially going to see a move of around, we could see a move of about 120 pips because we have to take out this level here. And after taking out this level, then we'll potentially see it moving all the way to all the way this way to where we were around March. Okay. That is in case we get a strong jobs report. Now, in case we see a weak jobs report, then it means that Euro USD, okay, if we get a strong jobs report, then it means Euro USD is going to have a very sharp sell that could take it at least back to where it was around Monday. That is a move that is also possible. This is a move of about 150 pips. So what you could do is that you could have your sell stops set around that 50% fib level, and of course your stop loss towards where the market price is, so that in case it sells, in case it buys, then you can see a move all the way to the downside here. And of course, in case it sells, at least you'll be able to benefit and get about 150 pips on your trade. Okay. Yeah. So those are my thoughts. How will higher NFP affect the indices? Okay. Now the indices are still looking fairly weak, as we can see. They were a bit overbought. I do not know whether this has something to do with the bird flu that we are seeing in the US. I don't know if you guys have heard about the bird flu. Bird flu has been affecting, apparently even penguins have been affected from the bird flu. Okay, so it's getting quite intense. Okay, so I just need to just share this with you guys. I don't know if you guys are aware about this, but let me just share with you guys this so that you can see what we are talking about. Okay, so if there's anything that is going to be a catalyst for any selling on the indices, it's definitely going to be this bird flu. Dennis, you're saying share your thoughts regarding NFP release and gold performance today. I think I've already done that, Dennis. Just when the video is posted on YouTube, you'll be able to go through it and see what's happening. So yeah, so this is how it's panning out, guys. This is hitting the US like a tsunami. We're talking about many animals getting affected: cows, chicken, apparently even human beings. Not really affected per se, but there's a risk also to human beings. So, guys, these are things that these people eat. I mean, we eat cows, we eat chicken, we eat all these things. So, I do not know if this is the reason why we saw that sharp sell on the indices, but this is definitely a risk. Okay, this is definitely a risk, and we just have to keep monitoring it to see what happens. So it's being covered here. What to know about the latest bird flu outbreak in the US? You can go check it out and see what's happening. But it's definitely something that's hitting headlines right now. Now, I also checked on Twitter this morning. There was a headline that said penguins, they found dead penguins somewhere off Antarctica, many of them. So it's affecting animals, and that's essentially what's happening. Lameke said last time you taught us how to use moving average in a desktop, but you didn't show us on your screen how to insert and use it. Okay, let me do that. Just give me a moment. Okay, so let's just see the moving averages quickly. Just a moment. Okay, so for the moving averages, you can add them on your screen. You just simply have to go to insert, and when you go to insert, you go to indicators, and then you go to moving averages. And when you click moving averages, you can just simply edit them from here. The 50-day, the 200-day, and when you add them to your screen, they will automatically appear. Okay, so it's as simple as that. I have two moving averages, 50-day and 200-day, but you're free to edit them as you wish. Hillary, you're saying, what about USDJPY? USDJPY, I don't really have any new analysis on it. It's been steadily ranging for quite some time. And if we see a strong report today, then without a doubt, we are going to see a very strong USDJPY possibly trending above this level and going upwards of 152. If the report is not strong enough, then of course we are going to see some selling coming in there, and we could potentially see a retracement back to that 7-day low. How do you think gold will react with contradictory news like last NFP? There was a positive NFP news, but also high unemployment claims and negative hourly rate. Is a double spike likely? Yes, you can't rule out the double spike. That's definitely likely. But last NFP news, the data was revised. Okay, the previous number we got was 350K, and then we got the number revised to 275K. So 275K as actual meant that there was actually a decline in the jobs report. So if you saw how gold reacted, you saw that actually gold bought, okay? It initially first sold, then it ended up buying, okay? This was the move that gold did, somewhere around here. Can just get it for you, okay? This move right here, this was the previous NFP. Okay, it first sold, and after selling, it bought and went all the way this way here. Okay, so that move essentially was because of that mixed data. So of course it's very possible that gold will give us a double spike, because it also is open up to it's also reacting to those geopolitical tensions. Okay, yeah, but gold is overbought, guys, right? Gold is overbought. I don't know whether it has in its price action any momentum for any buy right now. I don't think so. I think the most it will do is sell. Okay. Uh, Thanks a lot, sir. Are you buying or selling gold for NFP? I'm going to use buy stops and sell stops. I'm going to use buy stops and sell stops. I do not attempt to trade either before or after. I trade based on what the price action does. So I'm going to use buy stops and sell stops on the Euro USD and GBP USD for NFP. Yeah, awesome. Yeah, I think that's it, guys. That's it. Thank you so much for attending. I wish you all an amazing NFP today. And of course, we'll catch up next week on Wednesday for the next episode of the Snapshot.